So now we'll go into the Q&A portion, and I'd like to call back Sir Toby and Sir Herrera. So as we go through the questions, um, can start with this one. One question that we've gotten from one of our participants. So with a challenging short to medium term fiscal situation in the country, do you think there will be credit rating downgrade risk for the Philippines?
Let me take a stab on that question. I think one of the rating agencies already mentioned that the outlook for the credit rating of the country has been downgraded. It's just the outlook at this point in time. But I think as we move into normalcy, we are still looking at the economy growing at close to 6%. In fact, NETA is forecasting 7 to 9%. I think the resiliency of the economy will help us weather through for another year or so. Depending on what happens, the risk factors that we mentioned, I think that is not coming soon in a year or two. But it could happen, but a lot will depend in terms of what happens next. It is not just based on fiscal deficits, because if it's just fiscal deficits or debt to GDP ratio, then other countries could probably be at a lower credit rating as well. In fact, if you look at the emerging markets, those rated BBB, we're just in the middle of the pack at this point in time. There are other countries rated same as ours, which have higher debt to GDP, lower per capita income. So I think I do not see that happening in a year or two. Again, a lot may happen in the next 2 years, but that is probably out of the cards, in my view, in the next year or two.
All right. The next question that we have is, would REITs perform like the bond market, giving an increasing interest rate environment? And I'd like to give an answer to that. So REITs are always usually compared to treasuries in that it gives a specific dividend amount. And one of the challenges of REITs right now is to be able to offer a dividend yield that outperforms 10-year treasury benchmarks, which I believe is right now around 6.5% for the Philippines. One thing that we really like to consider when it comes to investing in REITs is that there is the aspect of asset injection, where property companies would infuse more assets, or for example, for C-REIT, they would infuse more solar assets into their company. And that is one thing that brings up the the asset value of these REIT issues. We've seen that in a REIT, that as every time they infuse the new properties, their stock price went up, even if it thinned down their dividend yields a little. So in summary, one thing about REITs is that you get the asset appreciation through the infusion, as well as having a dividend rate to keep your portfolio defensive. Okay. The next question is it advisable to invest in gold or other asset classes amid global uncertainties?
Maybe I'll give my 5 cents worth on this, Gab, if you don't mind, and feel free to also add.
Yeah, sure. Go ahead.
If I may give the views of a lot of the global multi-asset managers that I sort of speak to or look at. What's really been happening typically, okay, I should say typically in a situation where you don't have good outlook on stocks, you don't have good outlook on bonds, and the situation we're just in, obviously, if you were invested actually in oil and gas stocks, you would have done very well, or gold, or commodities, because that's where typically the rotation happens of the money goes in. They will put more weight. If from an asset allocation standpoint, I should say, they will now become overweight in those type of asset classes like gold and commodities and alternative assets, as we call them. But the key, and I want to say it again, the key is to have a good asset allocation, and the portfolio should be, in an ideal scenario, should be invested in each of these different asset classes. The challenge for us Filipinos in the past and up to now actually has been always like well, typically, if you want to invest in gold or other, gold invest, uh, and even even before, no, at commodities as well and REITs, it was not readily available here in the Philippines. If I may do a quick shameless plug, we tried as much as possible to make this available for our retail investors. And about 2 years ago, we relaunched a unicapital co-managed by Atram Global Diversified Funds. And it's actually invested in global assets, meaning global equities, global bonds, but with a very big tilt as well towards the Philippines. Being Filipinos, we tend to obviously be domestic biased. So it will also be invested in Philippine equities and Philippine bonds. But that also that particular fund was also invested in gold and alternatives. In fact, it was one of the major, from an attribution analysis, it was one of the reasons why it did perform very well in 2020. And I believe, if I'm not mistaken, it was the best performing balance fund in 2020. So the kind of investment that is now available to us is there if you want to have some exposure in gold, but you can't afford the $50,000 or $100,000 minimum investment that we have. Because, through Unicapital, and certain partners, you could invest in gold. This is probably one of the simpler ways because somebody's looking after it for you, making the day-to-day investment decision and managing the portfolio. And the best part actually is you don't need $100,000. I think you can start off with 10,000 pesos. So you're investing in pesos as well. So many choices, but yes, it's good to be in gold as well, and it's good to be in different asset classes at this point. Thank you.
All right. Thank you, Sir Toby. It's good to know that on top of the Philippine equity uh, opportunities that we show, we are also able to offer to our clients investments in other asset classes, and not just in the Philippines, but also in global markets. Okay, so and the next question that we have is how do you project the local stock market growth versus that of other countries? I think Mr. Herrera, you would have a good idea on how to
Right.
approach this.
Let me share with you my uh, understanding of how we look at different countries. Of course, there are a lot of variables, but clearly in any investments, for me, what's critical really is that the starting point is that the earnings growth of the companies, and then you will have to look at the valuation of companies. That's why I think in my talk earlier, I mentioned that in the US, my concern was that uh, valuations are quite stretched, while corporate earnings are coming in, but the valuations are stretched. I think most studies are showing that valuations are not as stretched in emerging markets compared to advanced economies at this time. So for me, very crucial will be really the price earnings ratio and the earnings growth. I mean, I do recall a reading that I had coming from Peter Lynch, and he was saying that a normal thing will be earnings growth will be equal to PE ratio. Like if the earnings of corporations will be growing at, let's say, 40% per year for the next, let's say, 3 or 5 years, you don't mind paying a 40 times PE. On the other hand, if the earnings are growing at just 8%, a stock that might seem cheap at 8p, it's cheap because there's a reason, because the earnings growth are not as substantial. So for me, it's critical to look at the relationship, or sometimes they call it PEG, price to earnings growth. So higher than one will be something that is not good. So you want a low PEG ratio, meaning the growth is much faster than the PE ratio. That's one of the critical things I use when I try to spot bargains, and I look for companies between a company and the other. So between countries as well, I think Bloomberg, even your handsets, could give you indications of the price earnings ratio of the entire marketplace. You have to go to individual stocks within the companies or the countries, composite indices, to look at individual stocks. So that will be my way of measuring and an indication on what will be good or bad, and what will be something that will be looked after. So if I were to look at the Philippines, we're coming out of the gates very last because of the long longest lockdowns that we had been implementing in the country. So we're just starting our race, and the rest have gone out of the race. So we're doing a catch up, and as Gabes mentioned, on uh, residential units, in terms of power as well, mobility, we are just seeing an increase and back to previous levels. In fact, some of these indicators are even showing higher than previous levels. So those are the key indicators for me to say which countries will be good to look at.
All right. And I'm currently thinking that given that the emerging markets focus with all the tensions happening in other continents, emerging markets with the Philippines being part of it, would actually have a good inflow in the coming quarters once all of these headwinds of heightened prices of oil, input commodity prices would start to alleviate. Okay, the next question that we have, what would be a good stock portfolio allocation to do during this current situation? And for example, having a 60% cyclical and 40% defensive. Okay, with this one, we presented their three baskets earlier on, and we really have weighted it. We have created three to be able to fit investment objectives and risk tolerances of specific clients. So we do have our defensive basket, which for conservative clients who are looking to conserve their capital and would like to make returns on dividends, we do have that. We do have that basket. Our second basket we balance with growth and defensive stocks. So that would be where we put cyclical and defensive stocks. We put an exposure there for you to be able to outperform at least the 15% expectation of corporate earnings growth for the PSEI stocks at 16.1%, and still with a dividend yield of 4%. And then lastly, for those who are really looking for capital growth, although with a little bit higher risk compared to our other two portfolios, we do have our growth geared basket where we're looking to, we are hoping that corporate earnings would be at par to around 26% by the end of the year, and still offers a little bit of a dividend yield of 1.2%. So with that, it will the allocation would really be down to investment objectives and the risk tolerances. Once you identify that for yourself, you would be free to choose which basket that you would want to invest in within your portfolio. And again, as we know that everybody will have their own preferences and beliefs, our baskets are recommendations, and we'd like to invite you to sit down with us if you would have any more preferences that you would like to put so that we can adjust and tailor fit a basket for you. All right, and the next question that we have, can we expect that there is a likelihood that the Philippines may also experience the same surge in COVID-19 cases happening in other countries currently? Well, for that, we've already had our surge. That was the surge that we had in January. All these other countries were not having that surge at that time, and that was the Omicron surge. So the other countries that are going through this, it's their turn for their Omicron surge to spread. So if we look at the likelihood of this happening, there may be should the new variant come up. But what Omicron has taught us is that the vaccines have been resilient in battling the grave illnesses. And as you all know, Omicron did have record highs in terms of surge, but did not lead to grave illnesses as we saw in hospitalization rates and death rates. So as we move forward, we are seeing that we are really moving into an endemic scenario. Even in the past month, when we moved into alert level 1 and there's heightened mobilities and we can see a lot of rallies happening for the elections, we have not yet seen a new surge in infections. So at least for that, the risk is low. Okay. Next few questions. All right. What funds does your company offer in relation to the select stock picks you presented earlier? Can you discuss briefly their 2 to 3 year and year-to-date performances? Okay, when funds. And then addition to that question, do you also offer global stock funds? I think VDP would be best suited to answer for the global stock funds. For the funds that we offer, I know that we also have few, Sir Toby. But for the select stocks we presented earlier, those are recommendations that we've crafted with the intention to be able to offer different risk profiles, a good way of investing. And if we look at their 2 to 3 year and year to date performances, well, 2 to 3 years they were affected by the pandemic and went down. It was going up already, but we had now we're having a turbulent start to 2022. So in terms of year to date performance, some of those stocks in those baskets are currently down. And for us, we believe that stock that has a very low stock price but very good fundamentals are good stocks to invest in for the next leg up.
I think
All
it's
right.
also better say it's also best to clarify, if I may add to Gam, that the funds. Sorry, I misused the word. The portfolio or the basket of stocks that Gab showed is not a mutual fund. So just to be clear, that's why it does not have a 2 or 3 year return. Um, Historical returns, if that's what the question was about. I just want to sort of make sure that I understood it as well correctly. So the other thing is we are an open architecture. When I say open architecture, we have different partners that we could actually help our customers with their investment objectives. And I believe that one of the earlier question was, do we have global or funds that has exposure to global? The quick answer is yes. There's there's fund managers that we are partners with who does feeder and feeder funds that we could actually invest into, US, a pure US equity. There's some that the theme is consumer discretionary. There's even one with a technology or a global technology fund. So there's different ones. I guess the quick answer is there's different ones, and it's best that we talk, or if you could talk to your salesperson within Unicapital, and Marlene and I as well would be happy to guide you as well as Paulo. Thank you.
All right. And well, so while we don't have any further questions in the queue, I think there is one question that I think all of us could help answer. Given that where we are right now with the headwinds and the tailwinds that are currently affecting the Philippine economy and world economies, from an investor standpoint, is it a good time to enter the markets right now?
Let me take a stab at that first. For me, it's not about timing, whether it's now or a year from now. If you have the money to invest, you just have to look for the right asset class. Are you going for bonds or stocks? Because keeping the money in bonds or in stocks, there are as well risks because markets might be moving ahead of you, or you might be positioned in the wrong stocks. So it will relate to your risk profile, your objectives as well. Would you need the money in 1 year's time, 2 years time? If it's a long-term investment, I think Toby has mentioned to us that for the long term, I think equities will still be the best at this time. We look back in time. I think the last Asian financial crisis, the stock market went down from 3,300 to 1,000. And then the next global financial crisis from roughly 3,900 to 1,900. First was a 66% drop, then the second one was a 50% drop. In all these times, I mean, the next years after that, the market zoomed from 1,000 to 3,500, from 1,900 to almost 9,000. So if your investment horizon is for the long term, I think with interest rates at very low levels, although they're starting to increase right now, stocks will still be the right asset class over the long term if you're in the Philippines. I think the good thing about what has happened also in the Philippines is that funds that are invested overseas are now being made available. If you back in time, I remember we were trying to get SEC to get approval for investments overseas, and SEC then, this was about 15 years ago, they were saying, we're trying to attract investments locally. And here you are, you want to invest outside the country, put the Filipino long-term investments outside of the country. But right now, because of the situation, we're no longer that constrained about our dollar positions, dollar reserves. Then we have that opportunity to be investing outside as well. So I think it's incumbent upon us to take a look at the opportunities, not just locally, but also overseas. But for me, the thing is that, okay, if I see that the next president may not be viewed favorably by foreign investors, because we've seen that they have been driving the movements in the local exchange. There are options. I will still have to keep funds in the Philippines because all my majority of my expenses will be in pesos. You also have to look at your asset and liability matching. You don't just take unnecessary currency risks as well. So that is how I'll do it for myself. And the main thing about long-term investments is that it's not about market timing. Studies have shown that really it's the asset class that's very important that will determine the long-term returns on your funds. Not timing, not selecting the particular assets. So there are basically three major sources of variability in long-term returns. The asset class itself, you selecting the particular assets that you will use selecting the stocks rather than just the index, and then market timing. Do I invest right now? Do I wait for 6 months? Do I invest only 50% of my funds? I think over the long term, the longer you keep your money invested, the bigger chances you have of outperforming the returns. Because keeping your money in short-term rates, you might be falling behind the inflation rate. So purchasing power-wise, that might be declining over time. So it's your horizon as well when you need the money. So that is how I'll answer that. There is no right, no wrong answer. That Toby has mentioned. It could be a bad outlook, but again, markets discount. Markets are forward-looking. In the same manner, if we look back, February, we still didn't have a case of COVID in the Philippines, and yet the stock market kept coming down. By March, when we had locked down the economy practically, then the stock market started to go up. Markets are forward-looking, so at any single point in time, it's in equilibrium. So each one of us is trying to outdo each other. Is it cheap right now? What are the risk factors ahead of us? So no one knows what the future lies, what lies in the future. But it is about the time that we spent invested rather than trying to time the market. So that is important in my view.
Yes, yes. So a long-term investment is actually what will really give good returns to an investor who are interested in any asset class for that matter. On our side, when we look at the focusing on Philippine equity in the PSEI, as we know, when the pandemic happened, the markets went down to almost 3,000. The PSEI went down to almost 3,000. And while everybody was panicking and selling off assets, for a lot of other investors, it was actually a very good time to buy. And you can see that those that were able to get the few shares, especially when it dipped down to 3,000, well, they have very attractive returns by this point with the market at 7,000. And for those 2 years of the pandemic, how the market acted is that it was trying to rationalize growth amid living in a pandemic situation. And now, for where we are, we've already passed the pandemic recession. Our country and all world economies are already on a recovery growth trajectory. And despite having these headwinds and tailwinds, what we are appreciating about this in terms of entering an investment is that these are keeping valuations at attractive levels for investors. And what Mr. Herrera mentioned is that we are forward looking for the next leg up when these factors alleviate, oil prices ease, and the Russia-Ukraine conflict ends. Essentially, when the situation balances us out for world economies and we're able to go back to pre-pandemic life and post-conflict life, the stock market will have a good pick up in the next coming years. With regards to the presidency, Sure, they may be a catalyst for growth or maybe a catalyst for risk aversion, but at the end of the day, given that we're coming from a pandemic recession, everything is pointing on the way up, and the economic recovery trajectory is pointing on the way up. And as such, moving forward, even if we have muted the inflows in the stock market, corporate earnings will continue to grow through that period. And fundamentally, those are very good things to buy. Even if you may have to look at the value that you're going to extract from it, maybe 3 or 4 years from now, at the cusp of where we are right now, with a lot of uncertainties and a lot of headwinds that could bring the market down or bring the market up, this is a very good base point at 7,000 to look forward to a higher PSEI level in the coming years. So for us, it would be a very good time to invest.
Yeah. Gab, if I may add, you just mentioned about the foreign flows. No, in fact,
Yes.
for me, that's more of a positive than a negative right now, because if we've seen the numbers, the last 4 years, a lot of foreign outflows have happened. In
Hmm.
fact, I was looking at the emerging market positions of some of the funds investing in emerging markets. They have underweight positions in the country right now. You know,
Hmm.
so I don't think that there's a lot more foreign selling that's out there, and there's more upside if uh, we come up with some surprises with elections or earnings of companies listed in the stock exchange. So for me, foreign inflows or outflows at this time, there's more upside than downside, given the fact that
Yes.
they have exited the country in the last 4 years.
Yes, and for a time that there's a lot of foreign outflows and they're holding very little foreign ownership here, giving us an underweight rating, as you've said. Once these factors alleviate, we will climb up on the on the weightings again from neutral to overweight, and that would mean that domestic investors who would want to hold right now could benefit from the next wave of foreign inflows moving forward. Yeah, and that's a very good position to be in as a holder, as a position for holding stocks at the moment or buying into stocks for the moment. Okay,
Uh, Maybe I'd like to also add a particular favorite of mine,
okay,
a stock, because you mentioned some of the stocks that Unicapital is also looking at. You know, I like a stock that I've been left behind in the past. My favorite
oh,
stock years ago, which I used for the education fund of my kids, was Jollibee. At 10 pesos, I bought Jollibee years before some of you were probably born, or were little kids still. And then, went up all the way to 90 plus, and I sold out. I thought, oh, I made 9 times my investments in Jollibee, only to
hmm,
find out that it went all the way up to 300 plus. And then when it went down during the pandemic, I went back in around the 90s level. This was the time I left Jollibee, because I thought at that point in time it was trading at expensive levels, 25, 30 PE. That's quite expensive. I want to see it come down first before I will go in. But I guess if you look at uh, markets in the US, for instance, if you look at Amazon right now, Amazon is probably trading at over 30 PE. And 2 years back in 2020, I said my favorite was Jollibee stock. And somebody was mentioning to me, but Henry, Jollibee was losing money in 2020, and his choice was Amazon. And I was saying, well, Amazon was doing record income levels. It's not about the current uh, earnings; it's about the future. I like
yes,
Jollibee, for instance, because the plan was to open up 500 stores per year, at least for the next 5 years. So the valuations might be expensive right now, as I mentioned earlier in my answer to an earlier question. It's not about uh, cheapness in terms of PE ratio. It's about the earnings growth as well. That's very important.
yes,
It might be trading at a high PE, but if you are seeing sustained earnings growth in the next couple of years, because the PE will be reducing every year because of high earnings growth. So I caution people to just be selecting stocks with very low PEs. There is a reason why those stocks are trading at low PEs, and there are also reasons why certain stocks are trading at very high PEs and are continuing to post strong price increases over time. So I guess for those who have not had the years like I did, I started investing in 1986 in the stock market. No, so I felt all those ups and downs all those years, and what has made me stronger is that each up and down are lessons learned, and that it further strengthens your resolve and your understanding of markets. Even to this day, I still learn a lot about what's happening. I try to interpret how I can move on those things. So that is something that I want to share to our listeners right now. But it's a long process. There are no right or wrong, but make sure that you understand you have a trading plan, and then you plan your trade, and then you trade your plan.
All right. Okay. Oh, we do have a question of what happened to DDMPR. That's the REIT of Double Dragons. Well, simply put, most of its most of its tenants were POGO companies right before the pandemic hit, and most of them vacated the premises when the lockdowns happened. So with the premise of having POGOs as their main tenants, they haven't been able to recover as well as other companies have already been recovering. So that is one of the biggest headwinds that DDMPR has right now. All right. Okay. So with that, we wrap up our 2022 market outlook. And we're sure there are still some specific questions on everyone's minds with regards to their investments and how to invest this year amid the turbulent times. And for that, we highly encourage everyone to reach out to us and would be happy to assist you in tailoring an investment plan with the use of our recommended baskets. Before we end our presentation for the day, we'd like to invite everyone to participate on our short post-event survey, and the link will instantly open once you leave this webinar. And with that, we'd like to thank everyone for taking the time to join us and listen in. We'd like to thank Mr. Herrera and Mr. Pañares for sharing their wisdom, and wish everybody a good investing days ahead. Thank you, everybody.